Too many traders spend an obscene amount of time trying to figure out how to sell put options. So in this video, I'm going to show you the new way to do it step by step that you can cut your time down from 30 minutes down to 30 seconds. And just to make it a little bit more interesting, I'm going to put myself on the clock a little bit later on with a live trade to show you that it is in fact possible. Okay, so step one. If you really want to sell puts quickly, you have to understand how puts work, and that your best case scenario when you're selling is you get paid to sell the contract and it expires and you keep repeating the process over and over again. Your worst case scenario is being assigned 100 shares of stock, which sounds kind of scary, right? Well, don't worry, I have a very simple solution for this. All you have to do is ask yourself this question: am I okay buying and holding 100 shares of company X at a discount? Now, what this means is if the price of the stock that you sell a put on drops, am I fine buying those shares at a cheaper price than they are trading at today? And am I okay holding them for 12 to 24 months into the future? And once you have a company that you can say yes to, you can continue on to step two of the put selling process. So why this works, it's if you tell yourself you're comfortable holding 100 shares of a company, then the worst case scenario of being assigned those shares, if the stock price drops, isn't actually that bad at all. It's something you would welcome because you bought them at a discount relative to where they're trading today. And you told yourself you'd be okay holding them for 12 to 24 months, which typically would give the stock enough time to move back up higher and hopefully appreciate in value for you. Okay, so moving on to the next thing you need in step two, setting up your chart to make it easy to sell puts. Remember, we want to cut through all the noise and do this quickly. So we have to have indicators on our chart to help us do this and help us find good prices to set our strikes at. We're going to need three indicators to make this happen: a 50-day moving average, a 200-day moving average, and Bollinger Bands. Now, the 50-day and the 200-day moving averages are lines that you're going to want to look at together. And what you want to see ideally is the 50-day being above the 200-day. And this is important because if the 50 is above the 200, it means the stock has been moving sideways or upwards and it's not falling lower, something we want to avoid if we can. So this is our quick check. If the 50 is above the 200, you can next look to the Bollinger Bands. But if the 50 is below the 200, it means you might not want to sell a put on a stock right now because it has been in an extended period of selling off and may continue to do that for some time. So assuming the 50 is above the 200, we move next to the Bollinger Bands. We can use the lower or bottom Bollinger Band as a starting point for our strike price when selling our naked put. How can we do this? Well, 95% of the time, a stock's price is going to be located in between the upper and the lower Bollinger Bands. So the math literally suggests it's unlikely to break below the lower band, and it only happens 2.5% of the time. We will then take this price of the lower Bollinger Band over and apply it to step three. So now we know how puts work along with our pseudo worst case scenario, and we have an idea of the strike price that we want and if it's a decent time to sell a put. What we need to do now is combine one more piece of critical information to really lock in our trade. And to do that, I want you to think about if you went to the casino to play poker. You probably aren't a pro and probably don't know the game that well as the card sharks that sit there all day and night. So your odds of winning at that table would be quite low. But what if you could flip the script and become one of those card sharks? What if you could have the good odds of winning for a change? Here's the thing, you absolutely can, and you can tilt the odds in your favor by using what's known as the delta. And in this strategy, a delta of a put contract is actually going to help you select the final strike price that you enter your trade at. Remember, we already found a price level in step two thanks to our Bollinger Bands that we like. We're going to head straight there in our options chain, and then the delta helps us by giving us a snapshot of our odds of winning the trade. Winning meaning not getting assigned any shares and just pocketing cash all day long. A delta here of 0.2 would mean that there's a 20% chance right now of being assigned shares. So we would start by looking at the price we got from our chart and then look at the delta of that strike price. If the delta is showing 15, the question quickly becomes, are you okay with a 15% chance of having to buy 100 shares? If the answer is no, keep looking for deltas that are in line with how much risk you are willing to take on. remembering that if you follow these steps on great companies you want to hold long term, the possibility of purchasing shares shouldn't register as a negative. It should be an acceptable scenario and outcome. Once you give yourself a yes with the delta, you are 99% of the way there. One thing I'll mention about picking an expiration date, which all option contracts have, to keep it extremely simple and straightforward, I like to focus on the 25 to 45 day range compared to the shorter or longer time frames. This has been the sweet spot for me and helps me get the most out of time decay when selling a put option. So next, step 4 would be picking your strike price in your trading platform of choice, selecting your quantity, your limit price, and the day order, and submitting it to make it an official trade. And this is really quite an easy step, especially after doing all the legwork in the previous steps. At this point, you should be very confident about clicking that submit button and making your actual trade. So now I'm going to go ahead and show you how this works in real time, all in 30 seconds or less. Let's start the timer and get after it. So the market's down today a little bit, which is a good thing if you're going to be selling puts. You want to see if you can sell puts on red days and try to buy back to close later on when they turn green. But for this example, again, we're going to go 30 seconds on the timer, put that on in the top corner, and then we're going to get this thing ripping in 3, 2, 1. Let's boogie. The only stocks with decent volume today look like Palantir and Tesla. And Tesla's a bit expensive for me right now, so I'm going to go into Palantir and look at that. I can see that the 50-day moving average is above the 200-day, and the price is a bit extended, so it's probably due for a correction. So I'm going to pick the lower Bollinger Band right there around that $70 mark. And I'm going to go just shy of 30 days out to May 23rd and down to 70 and see what our deltas are looking like. Okay, 5% chance of having to buy shares at this point. Is there good volume? Yes, there is. Open interest is over 1.5K. So I'm into this trade right here. Click sell, click order, limit price, apply to sell. Done deal. So there you go. Selling a put start to finish in 30 seconds instead of 30 minutes. It doesn't have to be complicated. You don't have to spend hours analyzing data at your computer. You just need to have a few guides and steps to follow. If you want to see a bit more into how I sell options, grab a free copy of my trading checklist at www.tradingoptionsdaily.com/checklist and watch me set up my full trading account step by step in this video right here.